The crypto market is expanding its range quickly. What this means is money is flying into the crypto market, which is creating a lot of volatility. Now there's three charts I want to show you guys. The first one is the Bitcoin chart that is accumulating above $100,000. Now there's been two periods before this that we've accumulated, and once we broke the highs, you could see that Bitcoin went for a strong rally to the upside. The second chart is the total 3 chart. And what this is altcoins. This is excluding Bitcoin, excluding Ethereum. And what it's showing you is we are one big high away from breaking into a massive altcoin rally to the upside. The third chart is Bitcoin dominance. This is showing how much Bitcoin is dominating the markets. Right now, there's up to 59% of all the money in crypto sitting in Bitcoin. But the important thing to pay attention to is this trend line that we have broken. And this trend has been going on for the last 2.5 years, meaning that Bitcoin's actually truly been dominating the markets. But then we get to a certain point where Bitcoin actually sells into the altcoins and we have a altcoin rally. And by us breaking this trend, the total 3 sitting at the highs and Bitcoin above $100,000 is truly possibly giving us a hint of a massive altcoin rally to the upside. So this is why I'm bringing you this video. Firstly, there's a lot of opportunity by having the ranges expand within the crypto markets. The second thing is there's also damage that can be done if you do not time the market correctly. So in this video, I'm going to show you exactly how I have structured my portfolio. It is so important to understand that short-term volatility is going to be at the max. And what this is going to do is set up many traps to trap you out the markets before the big move actually happens. And that's why I've built a powerhouse and simple system to make sure that I can survive the volatility and actually catch the big wave that we're looking for. So it's about taking this market and truly using the opportunity and not getting shaken out. What's happening, guys? I'm Sheldon the Sniper. I've been trading around 5 years and I've now started this channel to teach you guys all of the lessons that I have learned. The important thing is everything I teach in these videos are for educational purposes. What I'm doing is I'm taking my journey and showing you how I make it happen and what do I do. By doing this, you will see how I form these blueprints. And these blueprints can teach you a structure that you can use to build your own blueprints. So none of this is financial advice, it's only my journey and education I have to share with you guys. Now, the exciting part before I jump into the content. What I have in front of you here is something called Sniper Bags. As this is my new channel, I do want to get to 100,000 subscribers. So what I have done is created Sniper Bags. And what this is I trade a lot on my personal accounts outside of the shows. And what I've done is a certain percentage of any profits that I make, I put USDT into these Sniper Bags. So once money is put into these bags, it will not be traded and that will be the value of the bags. And when I reach 100,000 subscribers, I'll be giving these bags away to 10 of you guys. That qualifies you to possibly win the bags. Now, let's begin. What I'm about to do is take you down a road of analysis, understanding where the market's actually at, then forming a full portfolio structure. And what this is going to do does not matter if you watch this video far in the past, you'll be able to analyze the market and understand how you should be shaping your portfolio. So the first thing we need to understand, does not matter if it's Bitcoin or altcoins, cycles, right? We've seen this multiple times before and it is so important. And what it basically shows you is there's 3 movements within the markets, right? There's highly aggressive upward stages, and these are things that we call bull markets. Then we have the big drops, which are bear markets, as well as sideways phase that happens after that. Then we get to a point of markets starting to go up again. And what you'll see every couple of years, you will see the cycles reset. Now, it's important to understand that these cycles have different phases. And these phases work with different emotions. So when we are seeing sharp downside, we are seeing a lot of things like panic, denial, and a lot of these scary kind of emotions that are coming to play that are getting people to panic out the markets. And by the price dropping quickly, it's showing that a massive amount of people are panicking out of the markets. Then we get to the sideways phase. And what this is once a big drop has happened, now price goes sideways and rarely allows these emotions to get into people's minds. If you go into a loss, and let's say a big loss of up to 50%, 60%, 70%, as many who buy the previous tops of cycles will go into those kind of losses, and you sit in those losses for many months, what ends up happening is you end up completely losing faith and selling at a loss. And the market is brilliant at allowing you to make the actual mistake. So in the sideways phase, you will see things like anger and depression. Then we get to a certain point where the market starts to reset and the new cycle starts. What will start is a first pump, which is known as a disbelief pump. And what this is because the market's been in a bad place for a long time, no one believes the pump. Then what happens is another pump comes after that. And this is where hope starts to come in. I hope the markets are going to recover. I hope my bags are going to recover. And it's these uncertain emotions that are sitting in this area where you're hoping, but you're not 100% sure. When do you become sure? Is when you really start breaking important highs. And you start to see price go higher than what it's ever been before. And what this is this now starts to shift the mentality of the market into the more green and exciting emotions. And this gets people to buy in very quickly. The excitement of making money in a very short period of time is what drives the market to buy at a very fast pace. Therefore, you will see that price starts to speed up dramatically. Then we'll have a drop, and at any point we'll go into the bear cycle. This is why it's so important by even just looking at this over here. When something is going fast to the upside, it is getting near the end. When something has dropped and is going sideways for a long period of time, is usually a massive opportunity. Now let's speak about that for a second. I'm gonna bring up this chart and cycle over here. And I'm gonna split this into 4 phases. The first phase is known as A phase, and this is when the most harshest emotions are showing within the market. When prices have dropped dramatically hard, markets being affected, there's bad news everywhere, and to be honest, there's not much hope for the markets. And this is anywhere between the emotions of panic, capitulation, anger, and depression. And this for me is phase A. Now, phase A for me is one of the best buying phases you can as an investor. It is teaching you that when something is at a massive discount and the emotions are driving this to go a lot cheaper, gives you a massive opportunity to get high quality tokens at a massive discount. But the big thing is, it is very uncomfortable when it comes to buying. Now the next phase is the B phase. This is when we start going disbelief and hope, where the market starts to recover slowly, but the market is still uncertain. This is also a good area to top up and build some more positions. As you know, what comes next is phase C, and this is the certain emotions. This is when people are no longer doubting if this token is going to recover or not. It's recovering, it's doing well. Therefore, they have this mentality to go all in, which then gets us to phase D, when the whole world is talking about this token and everyone is piling into the token. It's moving at a massively fast rate, and at any point, this then ends. So by looking at this phase chart over here, you see all the different emotions, but the important thing is to understand the different phases of when you're looking to invest and exit within the markets. And a big rule that I learned in my journey is buy uncertainty and sell certainty. Now what I want to do is I want to bring up the Bitcoin chart, and I want us to analyze where is Bitcoin on the cycle. Then we're going to do total 3, which is the altcoins, and then we are going to build the portfolio structure and show you how do you set your portfolio up for this type of market. So what we have here is the Bitcoin chart, and it's basically showing you that over time we have these cycles, right? In 2017, we had a strong rally to the upside, then we went into the bear. Then we went for a massive rally, then in 2022, we went into the bear. Now we're at this phase where Bitcoin has now truly started moving to the upside. Now the important thing here is when we were in this phase over here, which was the deep emotions that we were experiencing. The panic, the denial. Bitcoin was 60,000. Now we are dropping into the 20,000s. You see how it went sideways for a long period of time over here. This is known as phase A. That's the hardest point of when to invest in a token. Things are just not looking good. There's not much hope over here. And it's quite scary, to be honest. But those who truly believe and know what they're actually buying, they drool for these type of buys. This is the best buys in the industry. And therefore, when Bitcoin was sitting anywhere between $20,000 and $40,000, were incredible buys. And you go buy many months later, and anyone that bought at 20 is sitting up to 500% in gains. Then what you see after that is price then went closer to the previous highs over here. And what this started to bring was this hope phase, right? I hope it's gonna happen. I'm not certain if it's gonna happen, but I hope it's gonna happen. And you see how price went there, sat there for a little bit, and then what happened? Price broke the highs. All of a sudden, certainty hits the market. Ooh, Bitcoin's breaking all-time highs. It is. And what you could see here is look how price starts to expand. Now, this is highly, highly, highly important. As we go from uncertainty into certainty, the range of the market opens up. So the moves to the upside get a lot bigger. And when the big traps come, because you get traps in these type of markets where a fast drop comes out of nowhere, these become very big moves to the downside too. Which means that even though if you zoom out, it is clear that we are moving in a strong directional move over time, inside of that, if you time something incorrectly and buy something too late, you can end up going into a massive loss when any trap comes into play. And the problem with that is if you are fighting traps, at some point, you can get destroyed and miss the entire move. And if you zoom out, all you had to do was buy at a good phase and hold, and you would have made tons of gains. But because you did not time the market and you just went into the markets, these traps affected you. And it becomes really hard to stay within the game. So the important thing here to understand is that you are looking to buy uncertainty before the market starts to expand. But now looking at Bitcoin, it's quite clear that the market is expanding highly. Now, if the market is expanding highly, it's important that we make sure the portfolio can withstand any short and mid-term volatility and make sure that you don't get flushed out for the entire big move. Now, the next thing we're going to analyze, because remember, Bitcoin leads the race, guys. Bitcoin is the #1 crypto asset and it's the biggest. And what that basically means is we always have Bitcoin that's going to lead before possibly we see the rest of the altcoin market start to catch up. So when you see that Bitcoin has done this, and you're looking at a token that is really good and you love it to bits, and you can see that it is in this early phase over here, you know where you're buying. And you also know that as it expands to the upside and gets to the higher certain emotions, you also have a clearer understanding of where you should be exiting the token. Every token has its own cycles. Now what I want to do is show you guys the total 3. Now what the total 3 is it takes up to 100 to 150 of the biggest altcoins that are not Bitcoin and not Ethereum, and it puts them in a chart. And this will show you something that's important. You have Bitcoin, you have altcoins. So what are you actually trying to do here? For me, the best asset that I want to accumulate within this market is Bitcoin. However, Bitcoin gets through these strong phases and at points is overvalued. When it is overvalued, I'm looking at other opportunities on how I can make more Bitcoin. And what makes sense to me is by catching altcoins nice and early, because every couple of years we have a rotation of Bitcoin into altcoins. And you have this phase where it's an altcoin bull cycle. And what that means is altcoins end up outperforming Bitcoin for a certain period of time. So by holding altcoins and catching them at really early plays, they will grow faster than Bitcoin. Therefore, when you sell those altcoins, you have accumulated a lot more Bitcoin. So without putting more money into the market, if I can just play my portfolio correctly and use altcoins when they are strong every couple of months to couple of years, I can use altcoins as a powerful strategy to accumulate me more Bitcoin. Now, how do we know when we are going to go into these big altcoin moves? It's when they get to breaking out of phase B and they end up breaking the previous all-time highs. So now let's jump back to 2017, right? And you could see that we had this big rally So altcoins ran with Bitcoin. They had their own mega cycle that happens. Then what happened is we went into the bear cycle, big drops, and we ended up going sideways for a long period of time. Then the market reset. It gave its first disbelief pump. It then started moving into hope, and then it started breaking these major areas. But where the key signal was us breaking the previous all-time highs. And what that ended up doing was it ended up turning altcoins from this uncertain mentality to certain. And the whole world started talking about altcoins. Therefore, people started buying at a rapid pace. And because these emotions get people so excited, it tends to happen incredibly fast. Therefore, you could see after that, look how fast we accelerated to the upside all the way to phase D. So now we go back to where we are now. And you could see that we were in this phase through 2022, 2023. We had our first disbelief pump. Then we had a nice little drop off and we pushed into phase B. What's phase B? Hope, right? We're starting to hope. And right now the market is filled with, we hope there's an Altseason incoming. When does that change, guys? When we break the all-time highs, and you could see we are not far from the highs. One candle that smashes through this area brings so much certainty to the markets, and that's when the speed up starts to happen. So what is clear by me looking at Bitcoin and looking at the altcoins right now is altcoins are definitely behind where Bitcoin's at. Now there's one more chart I want to show you guys, and then we're going to build the actual portfolio structure. Now this chart is the Bitcoin dominance. What it means is very clear. How much is Bitcoin dominating the crypto market? And what it has on the right-hand side is a percentage. Now what you can see here is you can see there are certain phases. So when we had 2017 bull run, you could see that there was a massive drop in the dominance. And what that basically means is a lot of money flew out of Bitcoin into the altcoins, and it got the entire crypto market to have a strong rally to the upside. Then when the market had a big drop and started to go into the bear market phase, what happens is Bitcoin gains a lot of strength. And it tends to gain strength for many months. You could see throughout all the way of 2018, all the way to 2020, we had the Bitcoin dominance go up. And that means that market's in a bad place, everyone's gonna hold Bitcoin, they're not gonna hold altcoins. Therefore, your altcoins drop highly. We've seen many altcoins drop 99%, many drop 90, many drop 80. And it basically means that altcoins are not so strong when the markets are in a tough place. Everyone jumps to Bitcoin. Then what happens is Bitcoin starts to rally up again. And as it starts to rally from uncertain into certain, people start getting excited that the market's in a good place again. Therefore, they are willing to start taking risks within the market again. And that's when you'll see at a certain point, there will be a fast piece where the markets move incredibly fast to the upside and everyone is flying into altcoins as they all want the bigger gains. And this phase is known as that altcoin season or that altcoin bull market. And you can see that it comes for a certain period of time. Then when the highs are in on the market and we start going into bear, what happens? Bitcoin starts to take strength again. And you could see now, for as long as we had this period of Bitcoin strength, is as long as we have seen strength here for over the last 2.5 to 3 years, Bitcoin's been dominating the market. But now something interesting happened. And what has happened is we have lost a very important trend. Now going back to this area over here, we also lost an important trend. And shortly after, we saw one of the biggest altcoin rallies we've seen in a long time. Now we go back and we see that we've seen multiple months of strength, but we are starting to see weakness from the dominance. And the fact that total 3 is sitting right at all-time highs is giving us this indication that at any point we can actually have a mega run within altcoins, which means automatically in my brain, I can use altcoins to make more Bitcoin. So what I've done is I've taken 3 charts to have an understanding of, for the next 12 months, what can this market actually be offering me? So let's recap that. The first thing was to identify that Bitcoin is in the certain levels. It's definitely getting to that point of expanding, which means there is going to be a lot of volatility. The second thing is the total 3 is about to at any point break the highs and go into phase C. This means that the altcoin market is about to expand as well. So volatility is about to become massive again, but there can be huge moves to the upside. And we also know timing this incorrectly can really destroy your accounts quickly. And the next thing was to look at what is better to put all my money in right now. Is it Bitcoin or is it altcoins? And the Bitcoin dominance chart has given us information that there is strength in altcoins and we can see a big drop in dominance. So the notes that I have now taken into that, because now it's time for me to share with you guys my portfolio structure and how I'm using all the capital that I have, where is it in the market and how am I using it, has now come off of this information. Because what I can see is because more money is coming into the market and it's expanding, the volatility is going to be the trick this cycle. The next thing is it takes time for this to play out. So the market will rally for a couple of weeks and it'll be choppy for a couple of weeks and rally for a couple of weeks too. So the timing aspect as well is it's important for me to be patient and rather play the bigger move with majority of my capital than me trying to trade too much inside of this, because one wrong move can really put me out the races pretty quickly. And the next thing as well is as we speed up, it's highly important that I do have an exit strategy, because I know that when the altcoin phase is finished, a bear market will come into play. And if I'm sitting holding 100 of altcoins everywhere, it's very likely my portfolio is going to suffer highly within the bear cycle. So my strategy is to build an altcoin portfolio and to sell majority of those altcoins into Bitcoin. Now, the next thing that's very powerful, I want to use an analogy over here. And I want to show you guys something, because again, this is exciting news, right? This could be an opportunity. By just getting good entries on your altcoins and being patient, you can end up making a really decent amount of capital. And the key here is not to fiddle and definitely not to buy late. So how does this look when it comes to portfolios? I'm going to bring up a racing analogy, because I believe that we are racers in this market. We drive cars and we are racing in the market, which means we need a vehicle and we need a car and we need a really good engine. Now, it's important to understand that abusing your engine and doing too many things might blow your engine up a lot quicker. You got to remember that Bitcoin is a very powerful asset that has done well for the last decade and probably going to do incredibly well for the next decade too, which means that when you are building your actual engine for the car you're going to race in the cycle, you need to make sure that that engine can last the entire race. If you are going to make it too risky and put too much strain on the motor, you can end up blowing the motor and being on the side of the road halfway through the race, maybe even 10% in the race. So that means when it comes to my engine, I need to make sure that I'm not taking too much extra risk. I need to make sure that this motor can last me for the entire race rather than me blowing it up at any point. So when I'm looking at my portfolio, and I'm going to bring up a portfolio now, and this is the structure that I've built. I have 90% of my capital sitting in long-term and spot plays. What that means is I don't have any leverage on this capital. I've bought these tokens and I've put them in a wallet. The next thing that's important as well is every token that I have bought there, I have made sure I have bought them in phase A and phase B. And remember, I showed you guys the total 3, but every altcoin has a different phase. And I'm actually going to show you this for a second. So here is an example of another token. This is known as Cardano. Now you could see that this token is not anywhere near the tops of phase B. This token is still sitting in phase A. So total 3 will show us the altcoins, but remember, some altcoins move quicker than others at different times. So the total 3 shows overall, but you got to understand that there are many different tokens that are in different phases. So if I look at Cardano now, this is a phase A token as an example. If I look at something like Solana, it is a phase B token. So what I've made sure is 90% of my portfolio is A and B phase buys. And secondly, it's the highest blue chips in the market, which means tokens that have communities, tokens that have been around for a cycle or two, tokens that have actual usage in the world, is tokens that I am fulfilling this portfolio with. And the way I separate this portfolio is low risk, medium risk, and high risk buys. 50% of this 90% altcoin portfolio is sitting in safer plays. Altcoins I really have good conviction in, and altcoins that I also have good buy areas. These are things for me like Ethereum, Cardano, Solana, AVAX, Dogecoin, these are tokens that I know quite well. These are tokens that I believe in highly and I've got great buys. So 50% is for my really high blue chips. Then I have the medium risk, which is a little bit more risk, but these are a little bit newer tokens. Not to say they're not brilliant, they're just a little bit newer. So for me, 𝗦𝗶𝗽𝗏𝗏𝗧 is one that's here. Pump Fund is one that's here. Tokens that are powerful, but they're still newish. Therefore, I can't just say they are blue chip low risk tokens. They fall under the medium risk category. And the same thing, I want to try buy these nice and early before they're in these confidence spikes. Then I have my high risk. I like gaming tokens. So gaming tokens are in my high risk. Because it's such a volatile category, they're amazing to the upside and very strong to the downside. For me, that's high risk, as well as AI plays as well. So again, you can have your own choice of what altcoins you put there. I've just split them in 3 different categories, but 90% of my capital is sitting in long-term plays, and I have to buy A and B, nothing outside of A and B. So for example, I am not buying more Bitcoin right now. Right? Bitcoin is a lot high, I'll buy it next cycle in phase A and phase B. So the key here is to load up quality altcoins, phase A and phase B. Then I want to jump back to the analogy of your engine. Why do I say you mustn't play with your engine and try and make your engine too fast? Because your engine needs to create sustainability and allow you to survive the entire race. So you don't have to take extra risks within that 90%. It allows you and gives you an opportunity to survive. By me investing high time frame, if news comes out today and the market spikes 20% and next week it's up 20% again, I'm still in the market. But if I'm trying to overtrade it or leverage, these things can spike me out. So again, the engine is there for long-term and strength. But now let's speak about the 10%. You know, on vehicles, we have things called turbos, right? So for me, I like to have a solid engine that can survive volatility and survive all of the nerviness that comes in between. And I can have patience, and I know it can make me a tremendous amount of cash by catching the bigger move. But what I can also do is I can apply turbos to this engine. This is where I take on a little bit more risk. It's only 10% of the portfolio, but it gives me an opportunity to be faster in the race than many others. And what these 3 pillars for me, because I break this 10% into 3 things. The first one is a bot strategy. So I use bots, and I use them on Pinex. Any of you guys can go find these bots, and you can actually create bots that trade leverage and they trade big ranges, okay? Now I'm not gonna get too specific of how to exactly use these bots. Nonetheless, I'm actually using leverage bots that plays with 5 times more capital than what I actually have. Therefore, with 3% of my capital, putting it on a 5x bot, I've created 15% out of nowhere. So I have more capital for my portfolio for the growth to the upside, as well as the bots can withstand some volatility. If your token drops more than 40%, the bots can struggle, and some of them can get hit really hard. Which means when I'm buying these, I'm making sure that I can at least withstand and survive 30% at any point, which means I'm buying red and I'm buying difficulty areas. Nonetheless, I'm only using 3% of my capital, and from 3%, I'm bringing another 15% to my portfolio. Then the next part, which is another 3% of my capital, is in low leverage trades. This is when I've seen a token breaking a long-term trend line. I'm seeing on high time frame strength. I buy these on 2 or 3x leverage positions. I buy them, I put a stop loss below the lows, and I leave these to catch the entire move. However, when there's a strong push, I do look to take profits on this. Anything with this 10%, guys, I know the profits can be taken from me at any point. One big dip, and I can give a lot of these profits back. So these are a little bit more active, and I tend to try grow this, and when I take profits, I look to buy more into the 90% category. Then it comes down to the last 4% of my portfolio. This is my trading account. Now every month, you have around 30% of the month good trading days to the upside, and 20% are actually bad days. I don't trade this account every day, but when I see the clear trades, I take leverage trades for 4% of the portfolio. And with that, I start with low leverage and I build them up as they start to go into the profits. And again, I take profits quite early on these portfolios, as one pullback can pull down at any point. So now let's bring it all back. The important thing is to identify where we are in the cycle. Where is your token in the cycle? Understanding between Bitcoin, Total 3, and the Bitcoin dominance, where is the market at? If you are watching this in a few months and we are in phase C, remember, as an investor, you're entering quite high. So actually a little bit less of investing and more trading is the better strategy. Where if you're catching things in phase A and phase B, the best thing is to get good entries and give it time to get where it's got to get. So by looking at these charts, you've analyzed the markets. Now what you do is you take this information and you build your portfolio. You know it's volatile. You know there's big moves, you know timing can affect you highly. So be highly strict that you have bought A and B phases. Be highly strict that when there are these drops into zones, this is when you are purchasing. You don't want to chase pumps. You want to build a strong, high quality altcoin portfolio that can survive and is filled with the best within the market. And you're looking to catch the entire wave instead of catching everything in between and getting yourself blown up. Then with 10% of your portfolio, you can decide to create any turbos that you want. Now guys, I spoke about leverage and bots, but you can also have meme trading in this. These are all new categories that I don't believe investing in right now is really good because they're new and they're very volatile. I don't want to blow my motor up, but with 3%, I can build a meme portfolio that maybe does perform highly well, and it's a turbo, but it is not my engine. It can be leverage, it can be margin, it can be bots. Guys, when you have 90% in an engine that you highly trust, the red days don't get so scary anymore. It doesn't allow you to keep running away. Go to the Bitcoin chart and zoom out since it's ever existed. This market is on its way up. Over time, it goes through cycles to get there. So if you're gonna put too much strain on the motor and get yourself blown up, you're not going to catch one of the best opportunities, I believe, of this lifetime, which is a new money system and a decentralized system. So set yourself up for success. When I started, I went full on leverage. I didn't think about any of these things. This is what I've learned through time. There's many times I've been shaken out, the market has destroyed me, and I've given back so much money and I've been filled with regret, and I end up sidelined. And when you're sidelined and you are in this negative space, you no longer see opportunities. And that's not a nice place to be as well. And remember, as this market wakes up, you want to be taking profits, filling up cash, filling up Bitcoin, and making sure that you have capital on big red bear markets in the future. So guys, so much love from me. If you've enjoyed this content, hit the like, subscribe. I'm about to bring you so much alpha and all the knowledge that I have, and I'm super pumped. Remember, you can stand a chance of winning 𝗦𝗏𝗏𝗧𝗏 bags, which I will give away to 100,000 subscribers. And last thing, none of this is financial advice. This is my experiences. This market has thrown me around, but it changed my life. And I'm here today to give back and share all the knowledge of where it's really helped me. Use this information to build your own strategies. It's purely education, but I truly believe if you put yourself to this, your life can change too. Love you guys lots, and remember, keep trading simple.